All right, it's 1 o'clock. We'll be getting started shortly. Before we get officially started, I just want to give glory to God for allowing us to embark upon this journey of prosperity, abundance. I got to give thanks to God for the revelation and the keys. Thank you, God, in Jesus' name. Got to read you this disclaimer. I'm sharing this for informational purposes only. It is my own proprietary system as a result of my own research, and it's a strategy that I use in my own real account. While it's a principle-based strategy, the strategy is subject to change. By sharing my trading activities, it is not a solicitation from me to buy or sell securities for others. Trading involves risk with possible loss of principal. Sharing my life trading sessions should not be construed as investment advice. It is research that I've done. It's strategies that I developed, and they work for me. And I am sharing that with you. So with that being said, we'll go ahead and start today's workshop. I'll try to keep it focused and on task, and we'll open up a question and answer session at the end. I ask that I hold your attention captive at least for the next 60 minutes. All right. Okay. So what we're going to do first off the top, because I got my man Adam here, is we're going to open up Thinkorswim. Okay. Thinkorswim is a trading platform that we can use for paper trades. Some of the tribe, they haven't placed their first trade yet, and it's a great platform to learn the basics of single leg strategy, which is not the strategy that we use, but it is the basis of the strategy that we use. It's step one. You'll learn the basics of calls and puts. You'll learn how to open a trade, and you'll learn how to close a trade. Most importantly, opening the trade is pretty easy, but closing the trade for me is the trickiest part. I've had profitable trades that I was making thousands of dollars on, not closed properly, and you end up losing money. So closing is probably more important than opening. There's a couple strategies once we get into it and we cover all the basics of market structure, because that is the name of the game for me, is to make sure that everyone listening and following and a part of the tribe learn market structure, because market structure applies to the entire stock market. So whether you're trading options like us, you're day traders like us, or you're the buy and hold investor, the structure matters. Okay, when to buy, when to sell, how high will this price go, how low will this price go. It's all based on market structure. It's not an accident that prices go up, prices go down, price goes sideways. That's not by accident. It's all based on the market structure, and the answer is always in the charts. So my primary objective is to teach you market structure, and then we go into the business of trading and how to execute trades, how to select a strike price, how to where to position your calls, where to position your puts. And TradeStation is, stand corrected. Thinkorswim is a great platform to do that on. Another good one, but very basic, is Tradier. I'm mentioning Tradier. I've just started using that platform because if you know or not, I'm a day trader. And right now, all three of my accounts are under 25,000. So you can start multiple platforms and get 3-day trades per platform. Okay, and there is no penalty for doing 3-day trades on Robinhood, 3-day trades on Tradier, and 3-day trades on TradeStation. However, TradeStation requires a $2,000 minimum to start placing option trades. However, Robinhood and Tradier, you only need the collateral to cover a contract. Most contracts are about $350, so you can start trading options as I advise with one contract and get in the rhythm. And one contract is a safe place to start. You're not going to lose a fortune, but you do tend to make a profit. And if you listen to what I am sharing with you, then we'll be able to enjoy a profitable trading career for the rest of our lives. So anyway, how's that Thinkorswim going? Well, it's just me and you. Barry's on the way, so we'll get into the market structure and pretty soon. But are you able to navigate through there pretty easy, or what's happening?
Well, I can tell I was able to put onto the paper trail, or not paper, but the paper.
You're able to switch over from live to paper?
No, I had it. Yeah, it's on paper. So because
Okay.
it had me choose when I set it up, so I saw it was there. So I need to select like what accounts we're in and things like that. So I'm just initial step one.
Initial step one
Was download and create the account.
Okay, so we did that. Now we need to find you an instrument to paper trade. I like the SPY. I see 500 over there. What's that one?
I haven't selected anything. I think that's just what comes up.
Well, put SPY in your search field. So here we go, guys. We're setting up a Adam's Thinkorswim for paper trading. I've selected SPY, the S&P 500 ETF, as his instrument to paper trade. You can't paper trade the SPX or the SPXW or the SPXX. It's an index, and it's not found on paper trade. However, the SPY is a derivative of the SPX, okay? So we are able to get the experience of SPX by trading SPY. It is 1/10 the size of the index that we trade, the SPX, right? SPY is 1/10 the size. However, it moves similar. So we can expose ourselves to using the VWAP, volume, relative strength index, and average true range, which are studies that I use to help with the probabilities of price direction and price action. So we're getting Adam's paper trade set up right now.
The app takes a while to load.
Oh, okay, yeah, it's big. It's a big one, but it's going to be fun.
Do you like to use the app, or do you like to use through the browser?
The app.
Okay.
Yeah, I do a lot on the app on my mobile. For me, I use the iPad for my charts. I use my desktop for my charts too. So when I told you one monitor, I actually use three: my phone, my iPad, and my laptop. And my laptop actually has 4 screens, 4 charts on it. The charts that I have up all the time are the 60-minute, which is the macro time frame, and then I break it down to the 15, which is the quarter system that I use, like football, and then I use the 5-minute time frame, which shows me my entries and exits. And then the 1 minute I use for precision. Because when you enter or exit a trade, when you enter the trade, because we are sellers, our iron condor strategy, we're actually selling the shares. We're not buying them. So we don't buy contracts, we sell contracts. And so when we sell a contract, we want the candle to be green. So we want it to be going up. And if you use the 1 minute time frame, you'll catch an up candle, or it'll show you the down, and it's like you don't want to sell it when this right here is say, so green, and then it went red, the little babies right there. So you don't want to sell it when, it's like red. You want to sell it as it's going green. You get a better price, right? And when you sell, you want it to be going down. Sell, yes. When you exit your trade, we're now buying the contracts back. I know this is kind of confusing, but we sold the contracts and we want to buy them back at a lower price.
Gotcha.
You see, so that's how we make a profit. We sold something at a high price, we bought it at a lower price. Okay, and we can buy it at a lower price when it's red and going down. Boom. That's how we do it. But that's some advanced stuff. I promise you, we're going back to the basics in just a second. But it'll all start to make sense the more exposure I am able to share with you about it. And we actually have a structure that we're going to follow. And we got an outline right here. And we'll save the advanced stuff maybe we'll get to the advanced stuff, maybe not. Okay, so, we'll go ahead and get started because you're here. Barry said he'd be 10 minutes, but...
It's okay, we can wait.
I don't want to wait. We got stuff to do. I got to go to the grocery store.
Right, me too.
I said, okay, 60 minutes and then 15 to 30 minutes question and answer. But because it's just
I wasn't
us.
supposed to be here.
Yeah, I know. I was surprised. I'm like, oh, right on, brother. You made it happen.
Put the next weekend's game in today's game.
Oh, sweet.
I'm like, well, then I'm going.
You're a week ahead. All right, we're going to do this. Okay, you won't be too long. I promise. All right, so the market structure. Let's talk about it. Let's talk about, I'll write it on the board. Previous day, high, previous day, low. Okay, so previous day high, previous day low. Price is going to go to previous day high or previous day low with a high probability. There's a high probability because what that means, the previous day high means is the most amount of money someone was willing to pay that day for the
Contract.
For the contracts. So the shares went as high as the previous day high. People were willing to spend money and buy it. It doesn't matter if there's a war. It doesn't matter if there's tariffs. It doesn't matter. There's always a previous day high. There was always a price that someone and people were willing to pay.
Gotcha.
Right? And so price will magnetically go back to that level to test it out and to find out, are they still willing to pay this much for that? Right? And if they're not, well, then what ends up happening anyway is the previous day low, the PDL, right? So the previous day low is the lowest that they were willing to sell. So it went as low as they were willing to sell. So what we do is we mark that off on our charts. You'll see me in the morning times, I'll draw a box. You see this gold line, I drew the top of the box, right? And then I just gave you a line.
Top of the box means top of the candle?
Yes. Yeah. That's our previous, that is the high for that day. So I believe that's a day time frame. And so that's high. That's our previous day's high. And I drew a box right there because what that means is the smart money team, the institutions will drive price to that level to see if they can attract buyers. And if they can attract enough buyers, well, then it'll go a little higher and a little higher until the buyers are like, no. And then price will reverse. So there will be a reversal.
The reversal is because people are selling.
People stop buying, and then there's always buyers and sellers. So
Right.
the buyers stopped outweighing the sellers at that point. And so more sellers are now showing up than buyers, and price does what we call a mean reversion. It reverses and it goes back down, and we can pretty much figure that it's going to head towards our VWAP line, which is this pink line right here. That is our value weighted average price line. So that is the line that determines the average price, whether or not the institutions are buying at a discount or selling at a premium. Okay, so however, I want to not gravitate too far from the previous day's high. The point being that is the level, the highest level that the buyers were willing to pay for the price on that previous day. So that creates liquidity at the top. And so that's how price ends up gravitating to the high, is the institutions have targeted the high of that day. So from time to time, we wake up and we see the candle shoot straight up. They're going after the previous day's high. And the same with the previous day's low.
Has it ever happened where the previous day high is the end of the day?
Not too often.
Got it.
Not too often. It takes a major catalyst. So for the previous day's high to exceed it at the end of the day, it takes an announcement from President Trump. It takes NVIDIA. Well, NVIDIA announces in the after market hours. So I'm trying to think of something else that would cause.
That's okay. You don't have to go too far off topic.
That's on topic. I consider that to be on topic as long as it's pertaining to previous day high. I'm trying to dig up something that would cause it to go parabolic enough to go higher than the previous day's high at the end of the day.
And the end of the day is when the market closes, right?
Yes.
Yeah.
So at the end of the
day,
day,
Fed Powell sometimes will speak.
Okay.
In that last hour.
Okay.
And you'll see it.
Yes.
Like this, depending on what he's saying.
It takes that.
Yeah.
It takes positive news. A positive news catalyst. Positive news has to be like delivered during market hours, like the Fed, Jerome Powell's like decrease the interest rates, you know what I mean? And then everybody's like wanting to invest. I got money now, and they okay, let's invest it. You know what I mean? And so that's what we'll see. But that's on the level of what it would take, right? Now, the previous day low, on the other hand, let's talk about that. Now, it can go to the previous day low and keep going down. And that's what we experienced, I think it was Thursday. And that's where we just let price dictate what we're going to do. You know, I tend to stand down at once, really, when price gets to the previous day's low and the lowest price and that, from that previous day, there are lower prices. There's always lower prices, right? And we start looking at different levels. We're about to get into the different levels that price could drop to and go to. There's probabilities with that too. It doesn't just, the bottom doesn't fall out, and it never ends up at zero, and there's always a level where buyers will show up. There's always a level where the institutions will not let price drop lower. because they tend to they stand to lose a lot of money for their interest and their clients. So if price dips too low, they will defend a certain level, and that's our job, is to think like institutional traders and identify the defense line, right? So
Can you identify those easily?
yes,
You can.
yes,
Okay.
yes, they are. Okay, so SPX, the index that we trade on a daily basis, has an average range of 85 points. So on average, it will move every day about 85 points, but that tends to be 45 points in either direction.
Okay.
So that helps us, though, in the later stages of the day to calculate, well, how much has it moved today? And going into the gamma pin trade, the compression trade towards the end of the day, we're able to use that data, the 85 number, and then break it down to the 45 number and determine, okay, this is going to move back up. If it's down, we not only do we have the range to help us with that probability, but we also have the VWAP line to help us with that probability too. So now we've got, I will call them indicators. Now we got two indicators. We're using the range, the average range, and we're using the VWAP to give us the probability of how far up it will return to.
Okay, so you're saying, let's say it's dropped 45 below, it's dropped 45, but the VWAP is still above that. You're saying it's going to still kind of try to revert to the VWAP?
Yes, it will revert. Hey, Walt, glad you made it. Yeah, it'll revert back to the V. It'll make an attempt. So that was what I really, like, we were, Barry and I were texting the other day, and we were in a trade, and he was asking me, is it going to go back? Because we were down considerably. And I knew, I don't know if I communicated, that 6,800 is going to be a magnet number.
You did say that.
Okay, so it's going to attempt to go back there.
Yeah.
Now, I've seen, as we saw, it went back zeros. Make a note, the zero is a magnet. So I'll tell you about that zero. I stay away from it, actually. So I stay away from the zeros.
Okay.
Yes, they're not good.
Okay.
They're bad, very bad.
Stay away from them as entries?
Go above it
Yeah.
or below it, but
Okay.
I will say never put your strike on a zero number. Let it always be a 5.
Okay. You're a short strike? Always?
Short strike.
Okay.
Short strike.
Okay.
Long strike is okay on zero.
Never short strike.
Never bad. Very bad. It's psychology. I'm making it sound superstitious, but it is psychology.
They are psychological numbers.
They are psychological numbers, and Price will. I mean, they play games around the zeros. So no good.
So
what ended up happening with your
We won.
at-risk trade? It came back?
Yeah,
It
it
came
came
back,
back for us. Mine, I had the auto stop set from earlier in the day at 30%. I wanted 100% on it at that point. We've sweated out this long. We went the distance, and we're still standing, and it's green, and I'm feeling bold, and look at that
100%,
placement. That's
baby.
expert, baby. 100%, and it closed out automatically at 30. Womp womp.
But
That's the one you
you
would've
were
made
on
the
your new
100,
platform too.
That's the one you would have made 100%.
You were on your new platform.
Yeah, I was on my new platform,
So,
and
you had a lot,
yeah.
you were getting used to a lot.
Ah.
So when we were losing money, and it dropped below our short strike, even below our long strike. Like what I was, so I was about to go into an appointment, so I couldn't like look at everything. I was wondering, like, how do you identify, like, where's the next level below?
Good one.
And was the average true range on the 5 minute, had it dropped? Like, was it just kind of staying in a little? I couldn't tell. Like,
it stayed at 67.78. So that was a defense line for the institutions. We did not identify that. I did not identify that in the pre-market technical analysis because I go 3 levels down. That was like 4 levels down.
Okay.
That was 4 levels down. And had I had used bar chart, so I'm gonna be drilling down on barchart.com. Drill down barchart.com. It's a free resource, and it has the institutional support levels,
could
which
follow
are
that when
very
you did that the
different
other
from
night.
the retail support levels. And I'll tell you what the deal is with those retail support levels. If you ever look at OI, open interest,
Yeah.
okay, it shows you the number of people interested in a specific price.
Yeah.
They're targets.
That's cool.
They're targets, though.
We're the big.
It's cool for us now that we know that they're targets, so we stay away from them.
Right.
We don't. We go above those guys or below those guys because they're walking around with an X on their back.
Wait.
Because price will go exactly to that target, and then reverse and take their money.
So where?
That's cold, but you can see it. I mean, it's right there.
Just to go back to clarify, short strike and long strike is how long you're in the trade.
No, that's theta.
So what's short strike and long strike?
Okay, that's your. Okay, so here I brought the board today. So let's say, for example, price is at 67.40 right now. So 6.7. Here, why don't I just do this?
Wait,
6.740.
she didn't get back to me on the big board, but I.
Oh, it's okay.
I messaged you.
Hey, that was a good suggestion, though. 6.740. Okay, so 6.740 is the price of SPX right now. So the strike would be above or below. So the call, I'm just saying, with SPX, if I saw that price right there, I'm going, this is not technical.
Yeah, no,
I'm just throwing a number out there.
Hypothetical, go
Okay,
for it.
hypothetical. Okay, so I would go 6.780, and then I would sell an insurance call to stop my losses at 6.785, and then I would do a put down here at 6.40 to 6.695 and 6.690. So that's what my structure of my trade would look like. So this is in the middle. My call is above it, and my put's above it.
And what's the reference to short and long strike?
Okay, so the short strike is here, and the long strike is here. Okay, so the short strike is the one you actually make the money on because you're selling the short strike and you're buying the long strike
As protection.
as protection.
Got it.
It stops your losses.
Right.
Okay.
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 It goes haywire.
Unless it go true, because price could go and you lose if it closes there. If it expires, keyword expiration. We're day traders, so the end of the day,
Got
1
it.
o'clock, right?
Got it.
Right. And so what we're saying is price had went
Right.
right, and that's where we found ourselves for about 2 hours. Maybe price had compressed
For a long time.
for a long time at 6, 7, 7, 8
Compress is like
sideways.
These little guys, yeah.
Yeah, that sideways action. That's compression. It's also known as accumulation. They're accumulating orders at that level and just absorbing.
Right.
Right. So, but in our case, they were energy was building for the next move. I like to think of it like that.
So what I was wondering, because it sat there for probably 2.5 hours, you said, so you just said that was 4 levels down. Was there a 5th level down or a 6th level down?
Yeah.
And could you see where that was by looking at the open interest? Or how would you determine?
I used barchart.com.
Oh, you did?
Yeah, for all of that, I used barchart.com to come up with the answers to what the lower support levels were.
Okay. I tried to follow you that one morning when you were doing bar chart, but I couldn't find, you said scroll down and go to something. And I couldn't find that. But.
That's important. I'll do that right now. That's an important one. and we'll say that relates to the previous day's low.
Because it was below the previous day's low at that point.
Yeah, it was way below. And normally when price is down, going down, I'm like ultra cautious, very, very, very cautious about entering trades on a distribution. Like price is descending, and I'm seeing big red candles and
Big ATR.
yeah, the ATR is huge, big like 18, 20 ATR.
Okay.
I mean, that means this thing is moving fast.
Yeah.
So in the next 5 minutes, it's going to be down 20 points. And then here comes another red candle down another 20 points. You know what I mean? So
Yeah.
it's moving in price like super fast, like a supernova at that point. And however, we can also use the ATR to predict the closing price, which is where Walt and Adam and those 12-to-1 traders come in, is because ATR will show the price movement, and if you take like right now it's set at 4, we'll call it 5 minutes. I'm going to round up and I'm going to say 5 minutes. The candles are moving 5 I'm sorry, I said 5 minutes. I mean 5
points.
5 points on the ATR. So if they're moving 5 points in 5 minutes, and there's 60 minutes left, you can pretty much start calculating, well, how much is this gonna close? Like how much will this move, per ATR candle?
Mm-hmm.
You know what I mean? And then you can start doing some calculations, and you can pretty much narrow down a range of where it's gonna close at.
Yeah, that makes sense.
Right?
Yeah.
So that's just another piece of equipment that we can use, the ATR, the VWAP, and we can pretty much figure where price is going to pin. So, yeah, you guys are going to be pin traders. Like price gets pinned down between 12 and 1. There's a pin. It stops bouncing around. The volatility goes flat, and it will only move maybe 5 points at a time. So it'll compress, and it'll go like that and up and down in this range, and it just stays in a range. And then you can enter your puts and your calls above the range and below the range, and you'll expire with a winning trade that way.
100%.
Yeah, 100%. Right.
So sometimes I notice they'll do these big runs up or big runs down right in the 5
Yes.
minutes of the closing.
Yes. What they did on Friday was they went to the lower liquidity at 67.25. They went to 67.25. And then let me change that time frame. There we go. They went to the lower liquidity at 67.25. I know it's really small right now. Can I make that bigger? So you see the wick downs down there. That was the liquidity sweep. And then they gravitated back to the VWAP, which was slightly above at 67.46. And price closed at 67.40. So based on the range that it was playing, I thought it would close at about 67.57-ish. Yeah, I wrote 67.57. I thought it would be just based on the 45% range, the 85 minus the 45.
Okay.
And so I had predicted the probability would be 67.57. I was off by about 17 points. However, my put was below the 67.25 sweep zone, so I was good there. And then I was above that gold line right there, the 67. I think I went 67.65, and
67.20 or 60. Well, you tell me. I'm trying to remember. 66.90 and 95 were the.
oh, for the original play.
Yeah.
No, I closed that one out, right? I
I'm
closed
thinking of
that.
the wrong day. Are you thinking of Friday?
Yes.
Oh, okay. I'm sorry. Yeah.
Yes, I closed Friday out. I took I think 25-30% on that trade. That's another thing is just taking the winning percentage, sticking to the base hits. We can get 25% win every day. Every day, when we get greedy and start shooting for higher percentages, that's when we start, the losses start occurring.
And emotions and all the other stuff keeps coming in.
Yeah.
Stick to the plan.
That's why I'm starting to use my auto close almost on every trade, because you'll see like when you start scaling up, you start buying more contracts, the profits get larger. It's just best like you're playing higher stakes, you're playing with more money now, and the emotional involvement goes up too. So the more money you're trading, the more emotions get involved. And if you just auto set 25%, you're good. You're good. I got to a point to where, $1,000 wasn't enough.
Right.
And it's like, wait a minute,
Eventually kind of
I'm in a trade where I have $1,000, and
on the line,
yeah, well, it's in my pocket. You know what I'm saying? Like I got it. It's mine. If I just close the trade out, and then I want more. Because I got in the habit of getting more.
Emotionally disconnected to the numbers, and it's all about percentages. Where, okay, I got used to $500. Okay, that's no big deal. You start going 1,000, you get no big deal, and then 10 or whatever that number is, and you just eventually emotionally get disconnected to it, and you just look at it as part of the game and the psychology of it all.
I did, and my biggest loss to date is $30,000 because, I started trading like that level. I mean, that's where I was at. I was like making $10,000 to $20,000 every day, man, and it changes your mindset.
Sure.
And you should always think of it as like.
So okay, let's end.
I just lost a lot of money. Let's stay thinking.
I hope this works in your favor. But what was the highest you've gotten?
About 20,000.
So you haven't beaten your biggest loss yet.
No, not yet. Not yet. Yeah. So I'm trying to like just emphasize like stick to the principles. Stick to the principles.
Right.
And we'll be doing this for a long time if we just stick to the principles and
play the long game.
And want more money in the trades than buy more contracts, but still close out at 25%. So that's why I started talking percentages as opposed to
so that
tens
30
of thousands.
loss, is it because you pushed past your game plan and you went for it? You went for the swung for the fences?
Yeah. Yep. It was green. Like every trade I've ever lost was green at some point. So I just didn't take the profits when I could have. And I will say and you'll see, as long as we go in the right direction, the trades will be profitable. Mm-hmm. Now, what do I mean by the right direction? I mean, if it's a bull market and price is going up, don't go down. Because, in other words, don't go to the put side if price is going up.
Right.
You want to pull the puts up. So right now it's 6,995. If price is going up, I need to pull the put up to maybe right underneath 6,740 and expand the call side. Right. So now I'm trading with the institutions because they're pushing price up. Right. Don't try to guess where the price is going to stop going up. In other words. Right. That's not what we're doing. Yeah. Hey, we're just going with the flow. So if price is going up, we're going to place our calls way up at the top, and we're going to bring the bottom up underneath the price. Okay, that's the strategy of the broken wing iron condor. That is the broken wing iron condor. It's because one wing is close to the price and the other wing is way above the price.
Mm-hmm. In that scenario, when the price is, so you have a trade on already, and you're saying the price is moving up, would you close the put side of that trade and just move that up, or would you leave that open and then add to, move it up? So in other words, like if you got a 66.80 and a 66.75, on the put side, and the price starts moving up, and you feel like, wow, these are way out of the money now, so I can move these up. Would you go up to like, whatever, 6,700 and 6,695?
I'll say this.
Or would you open a new Condor, or what?
I would probably open a new Condor. I would probably, as prices going towards that 68, 85 are the higher levels. Maybe there's a 50% profit in there. But what I'm also looking at as prices moving is the resistance levels, because it can hit a resistance level and bounce back down.
Yeah, okay.
And so in the earlier trades, as I was driving over here, that's what I was in fact thinking, is that when we get into an early morning trade, 7:30 or so, and it is going in our favor and it still has room to run, what we need to be aware of is the resistance levels that it will need to exceed past and through in order for us to get greater than 25%. Because the resistance level can change all of that. Right? And so I would probably close the trade out and open a new one.
Okay. All right.
Yeah, I would take my 25% and reposition.
Okay.
So if all I needed to do was close my my put credit spread, then I would close that and then reposition it as higher. Yeah, I would reanalyze the entire, like, I'd do a whole new smart money roadmap.
Okay.
Yeah, and formalize a new thesis and then execute it.
Okay.
Yeah, good stuff though, because we gotta get in the habit of repositioning and closing, taking profit when we see it, and I don't think I've been the best at that. I see profit, I need to take it.
Yeah.
Yeah.
It's hard to do.
It's hard to do,
Yeah.
but it's a discipline. You've got to take your profits. I talk to people every day that buy and hold stock, and oh well, I sold this. I should have kept it. It went up. I was like, well, was it green when you sold it? And they're like, yeah. I'm like, well, that's good. You took profit. That's what you want to do, because it's not gonna always go up. You know what I mean? Now, there are some things you should learn about how far it's going to go up, because the market structure will tell you like when, it's going to hit some resistance. Even if you're holding stock and you've been holding it for 10 years or whatever, I mean, the market structure is still there. It will tell you, the market tells you when it's going to hit a resistance level, and the possibility of it going down is there. It tells you that. It tells us a lot of things. We just need to recognize it. So that was a long explanation of the previous day's low. Okay. We talked about the VWAP quite a bit. That is the line that determines whether or not the institutions are buying at a discount or selling at a premium.
So, Titus, what happened yesterday between 12 and 1? Things were humming along, and then all of a sudden, it just took a nosedive.
Oh, see, that wasn't a nosedive to me. That was a probability. So I had already...
to go from 67.80 down to 67.30, that was...
So what you saw was the day's high at 67.69. So that was the day's high. There's a big red candle. I've got like this gold line drawn through it. This big red candle right here. That's the previous day's high. So price went up to the previous day's high. Again, like I'm saying, there's liquidity there. So that's the highest price that people were willing to buy. And then price, actually the target was 67.25 level because that was a demand zone. So there were orders at 67.25 that the institutions filled. So price went down from the 60 range into the 20 range, got the orders, and then returned back to the VWAP. So again, like I'm saying, they sold at a premium at the top. They took it down to 25 at the bottom, and they bought at a discount, and then they went back to the VWAP. So that played right along with my thesis that I had laid out in terms of price action for Friday. Where is that thesis? Is this the one? Yeah. See right there, I'd already identified that as a demand zone. And so I positioned my put at the end of the day.
Put is order, right?
The put, yes, that is the play. So,
Got it.
So I positioned my put right at 67.20, I believe it was. So right underneath the demand zone, I positioned my put, and then I had identified that there was I identified the range of the day was, I predicted price would stop at 67.57. And so I had positioned my call above where the previous day high was. So to me, that really wasn't much volatility or a crash. It was just regular price action. And from where price was that day at 67.12, that was the lowest. I looked at, that was the low of the day, so it's going to go 45 points. Remember I said 45 points, which would have been 57. So I was in the ballpark, and with this strategy that we use, you only need to be in the ballpark. You don't have to be precise. You have to have a range.
Right.
And you want to bring that range as tight as you can, but within logic, right? And that's what I did to position that 12-to-1 trade. Was I used the previous day high. I looked at the low of the day. I looked at the demand zone. What were the probabilities of that they were targeting towards the end? Because the moves, I know it may have seemed like a big move, but that really wasn't a big move. Not towards the end of the day. That was more of a compress and fade kind of move, especially once it got to like the 67, 40 to 30 range. However, back to bar chart. I want to get there real quick. Bar chart. I just want to show SPX. Does that make sense? Did I make sense? Okay. Okay. Without over explaining, but I just want to make sure we grasp that. So this is what bar chart. This is what I want you to see on bar chart.
Key turning points?
Yeah, it's at the very bottom of barchart.com.
Okay.
Key turn points. So I don't base my play off of that, but I will resort to it when the smart money roadmap does not make sense. You swipe up and down on it. Yeah, see how far, keep going. Yeah, that's how far you gotta go. All right.
Oh, wow.
Yeah, so it's there. But I do use it as a last resort when my smart money roadmap is not providing me with the levels that I'm looking for. Like Barry and I were talking about, price went down to the lower levels, and it was off of the roadmap. It went down so low. And so barchart.com would have revealed to us that there was a support level below the third level that we had identified. And that trade still came out successful because price gravitated back to the VWAP without any resistance. It was just a clear shot. So that was good for us. And let's see.
In bar charts, what area did you go into? Stocks?
I went to the top. There's a magnifying glass over there. And if you hit the magnifying glass, you can put in SPX.
Okay, all right. Just search for SPX.
Yes.
Okay. Oops. Try that again here.
I'm pretty much gonna go out and buy an iPad so I can do all this.
SPX.
Noticing what you use, would you think it'd be easier to do? Would you get the keyboard with it, or would you just do like an Apple Pencil so you can just? I see how you adjust things with your finger.
I use the pencil more than I am today. I don't see my pencil. I'll have to look for it. But
Is this what you trade on during the day?
I chart on that and actually execute trades on my phone.
Okay.
Yeah. This is just my handgun. Yeah. It's just I need to get in the habit of executing the trade on my desktop though. There's more
But it
information.
can be done obviously on an iPad.
It can.
You just your preferences. You like.
I do, but here's the thing: is I'm seeing improvements on the desktop version that I'm not seeing on my phone or the iPad yet. I haven't done a thorough search.
Have you
Maybe
tried
it
to do
is
it
there.
through the browser. That way you're seeing what your
See, good point. Yeah, I have not tried. I mean, like, is this the browser? No, I don't
Okay.
think I've tried to do it through the browser.
Okay.
And you bring up a good point. It probably can be done on my iPad. You get, like on my desktop, I get the probability data. This is 75% likely to, finish profitable. And I get these graphs and charts about my trade, and this is a good trade, or it gives me percentages of how well my trade's going to do, and yeah. So I mean, I kind of like that in my decision making process. Yeah. So we'll do that at the end. I'll see what the desktop does, or the browser version does. We covered the VWAP. We covered the rules of rules of entry. I'm going to touch on that just real quick. The rules of entry. We're going to probably spend quite a bit of time on the rules of entry, where it rolls into our next time together. The rules of entry.
Can I just ask you a quick question before you get to that?
Yeah.
On the key turning points, do you just look at that one summary box? Because I see it says see more. Or do you just look at that box? You just take those levels?
Yep, I just ordinarily take those levels,
Okay.
but let's take a look at what you've identified. See more?
You're talking about bar charts?
Yeah.
Yeah.
Like here, so that's the little box he's talking about, key turning points. It says see more at the bottom.
The
If I click on
see
that,
more,
it's opens up
fingers
this whole
closed.
universe,
Oh, well, there's some good data there. We've already captured most of it, though.
Okay. So it's not necessary. Keep it simple, right?
Yeah,
Okay. All right. Awesome. Thank you.
you're welcome. Yeah, we've captured a lot of this data. Some of it's not relative to day trading.
Okay. Awesome.
Yeah, so I mean, the most we're gonna use that one for is for the support and resistance levels. And then, any other questions before we won't be quite done yet. But any other questions before we move into the entry rules? No.
Yeah. Thank you.
Okay. So the entry. I have been using the box strategy and the VWAP entry. Okay, so the VWAP entry. So I'll start with the box entry first. The box entry is simply when price gets to the top of the box or the bottom of the box. We enter the trade. Top of the box, I would say, is an easier identification because price will go up to the top of the box. It'll do what they call a sweep, liquidity sweep. They stop loss triggers and all this. All these tricks are played up there. They play tricks. They trap traders. Traders get trapped, and there's a whole lot of shenanigans going on at the top of the box. All right. So yeah, they set traps. And so they want you to chase price. So you see price going up, it gets to the top of the box. Traders are buying like they're placing trades that they believe the price will go past the box and even higher, and then you'll see the price like reverse. Gotcha. Because that was as high as price was going to go. So the retail trader is reacting to the price action. So they're chasing it, in other words. Right. So we let price come to us in this way. Price gets to the top of the box. We've identified with the smart money roadmap what's at the top of the box. So if I look at like the roadmap from Friday, and I'm looking at the previous day's high, if price is going up, I'm looking at 68.45, and then what am I looking at above 68.45, because price could push past that. That was a developing range. So the previous day level is 68.60. So before the market even opens, I'm looking for price to go to 68.60. Okay, so if price goes that high, then what's above 68.60? That's what I'm asking myself, and I'm always asking what's above there by 2 to 3 levels, because it's possible that it can go even higher. But as we talked about, it takes like some major macro news. It takes a super catalyst to send price to the third level up. Like and if it does go that high, I mean, the likelihood that it stays there is minimal. But so in other words, we want it to go that high so we can enter our call at the top and just let it come down that way. Right? So that's what we want to do. So that's what we're waiting for, is for price to make go in a direction. And once it goes in a direction, then we can place our trade accordingly. And so that would be signal number one. But just because I see price at the top of the box doesn't necessarily mean I'm about to execute my entry. It means I'm starting to calculate the entry. What I need before I make my entry is for price to actually come back down and then go back up. That's how we get our double top. And so it knocks once, goes back down, it knocks again. The second knock, what's going to happen? Is it going to go up, or is this going to be a true resistance level and price be rejected and go back down? So that we call that a bump and run. Boom, boom, and it runs. Or it can do it at the bottom or at the top. Right? Yeah. So that is how we determine our entry if price is at the top, right? It'll go up, hit the top of this box, it'll meet resistance, it'll bump it back down to the VWAP line or down, not very far, because it's going to try it again very soon. So
stay near the top of the box.
Yes, it's going to attempt to stay near the top of the box, because price always wants to go up, unless it's a distribution day. And that we haven't gotten to that yet. Right? But price most of the time wants to go up. I'll say most of the time. And it'll come back down, and then it'll knock again. And depending on that second knock, what happens, that's when I'll may enter the trade. If it gets rejected, then I'm going to enter the trade. All right. If it gets rejected at the upper level, the second knock, then I'll enter that trade, and it don't matter. This comes off tomorrow. So
You want a paper towel?
nah, we'll save a couple steps.
Who is doing the rejecting?
The sellers and the buyers. The buyers and the sellers. So if it gets rejected at the top, the buyers are not buying. They ain't buying it. They're like, okay, this is the most money we're going to spend. You know what I mean? So the buyers stop showing up, and so then price gets rejected at that level. That's the highest price they want to pay, and then it gets rejected, but price will attempt again. So it's not taking no the first time. In other words, right? It's going to try it again, and boom. It either breaks that resistance level, because that's what it is at that point. It's a resistance level, and so price goes boom. It comes back down. Now, what I really like is when it goes back to the VWAP, right? And then it tests it again, and then it either gets accepted or it gets rejected again, and it goes back to the VWAP. Now, depending on this rejection, though, if it gets rejected, I'm entering my call up there. This is call zone, because this is the highest price that was accepted, and so that seems like the safest place to place a call, right? And you can do it pretty close to the money and get a good premium.
What is getting rejected?
They're not buying it.
Not buying what?
The index, the shares. They're not buying contracts. They're not buying like these are. Well, I'm going to call it a stock, right? But it's not a stock.
Yeah.
They're not buying the stock at this level.
Okay. What is an indicator that they're buying or not buying? I'm just
The price. The price is your indicator.
Okay.
So if price is going up, they've accepted it. If price is going down, they rejected it.
So you're not actively participating. You're just observing.
Yes, we call it price action. So I'm observing price action.
Observing price action.
Yes.
Okay, got it. I was wondering, you're getting rejected. You're making an offer and it's getting rejected.
That's it.
But are you making the offer?
Oh, me? Personally? Nah.
Yeah. Okay.
Nah.
All right. Somebody is. You're just watching it all happen.
So I have a question with that. So what determines it gets rejected? How long does that price stay there before it says, no one's buying it, and it starts getting rejected and goes down the other way?
People start selling it.
Got it.
So
They see it's getting rejected. They're
How
like,
many people
uh-oh.
does it take in the system a percentage before it says it
Millions.
drives it down? Huh?
Millions.
Yeah.
Yeah. Well, it tells you right here the volume. Well, actually, this one says 231K.
Got it.
And what were they doing? This 231K looks like they were selling.
And that's based
You see
on-
that big green
and
candle?
Each candle that opens and closes, that's because we're seeing, this is all 5-minute windows. If you have whatever
yes.
timestamp you have it on. Mm-hmm. Got it. Yeah.
So, I have a related question because I thought I heard you say something the other day. So, in a similar situation, so if it breaks resistance or it tests it, then it retraces, then it tests it again, and in your drawing, it's breaking through that resistance up
Right
to a
here.
certain level. Yep. Now, you don't know at that point if it's going to continue up, or if it's going to retrace, or if it's going to retrace a little bit and then continue up.
If
But
it gets through there, I kind of know where it's going.
But I've heard you say, I think I've heard you say you're looking at the candles to determine kind of if it's going to retreat or if it's going to.
I'm looking for reversal candles.
Yeah.
When-
Engulfing candles, I've heard you say.
Yeah, so when it gets
Does
up
that help
here
you up there?
and it gets to that level, and then it goes a candle wick up and then a reversal, that was a sweep. So it ain't going up. Right? So that was just the liquidity grab, and now we grabbed it, we go. So
Okay.
they go.
So
But
it's-
if it consolidates there, then what I'm looking for is a pattern. I'm looking for dojis, I'm looking for hammers, I'm looking for pin bars, I'm looking for those partial type candles that when they're in that position after a run up and you start seeing dojis and hammers and those things, then that means a reversal is coming. And so at that point, I'm looking for those signs. Otherwise, I'm considering the next target up.
Okay.
And so I'm holding until I see those signals at the top. And I've got the trade already structured, but I'm just waiting for the reversal to actually happen because I don't want to get trapped. I don't want to get bamboozled and played with a premature entry. Because like I'm saying, I've already identified, okay, there is a target above here, and if it should break the resistance, then the probability is very high that it's going to go to the next upward liquidity target.
Okay.
That makes sense?
It does. I'm looking at this chart from Friday to see kind of, because it did kind of get to a spot where it hit kind of these, right? It kind of came up here, hit the resistance, retraced,
Yes.
hit it again.
Yes. See how many times it
Retrace.
got rejected? It got rejected four
Yes.
times.
You guys see that?
That's 4 times. 1, 2, 3, and 4.
But
If not 5. I mean, you see
1,
that?
2, 3, 4.
And then at the end,
5.
that's rejection. So that's what rejection looks like in a pattern.
Because
What
it
was the time
went
frame
down
on that
past the
activity?
lowest.
This is
of
5 minutes.
It was here, and then
Oh,
it
okay.
went down, and then it tried to
That
come
was,
back, and it went back
actually,
down.
this was
Like it's the same
open
exact
on
level.
Friday, so this here
Okay,
is
so that was
Friday.
6 o'clock,
Yeah.
6:30?
Yeah,
Yeah,
and that was the prior day.
yeah.
So,
So that's what rejection looks like.
but when you were up here, Titus, when it was up here,
Mm-hmm.
and you had none of this to the left, would you have, like, what would you be looking for? I mean, you would wait. I think on the first test, you're just going to wait and see if it drops or continues, right?
Right.
But but on the second one,
I'm in.
at the same spot. You're in at that point.
Yeah.
How do you know if it's not going to continue up?
You don't.
Okay, so you just give yourself a lot of
So,
room.
yes.
Okay.
So I take my VWAP line, or I take the lowest line there. It was the VWAP line. I think that was the play, right? We took the VWAP line, entered put underneath the VWAP line, and then I gave myself a lot of room for it to run.
Okay.
What time did you do that?
That was about 7:30-ish, before 8 o'clock. I think that was before 8 o'clock.
All right. So I see that activity, and it that had crescendoed. It had risen to. By the way, what is the significance of the wick? I see the candle.
Buyers and sellers. I mean, that shows the strength of the candle. So a bullish engulfing candle would have a small wick. It's a big candle with either no wick or a little wick. And the same with a bearish engulfing candle. It'd be a big red candle with a little wick or no wick. And the more wick it has, the more indecision was involved in that candle. So there's certainty versus uncertainty. Take the indecision. That doesn't apply necessarily to that candle. It's certainty, uncertainty.
Right.
So when you start seeing like long wicks, there's uncertainty involved in that time frame.
Okay.
So in that time frame, the buyers may not have been that strong if there's a big wick in a green candle.
Exactly, okay. So it looks like at 7:35 yesterday morning, it hit 67.78 and then started to retreat.
Okay, is that the second retreat, or which retreat is
That
that?
was the first.
Okay, so I wouldn't suggest we enter into the first retreat.
So then your second one was at 8:08 a.m.
Okay, not too much longer, right? And so, if I was good, which I won yesterday, so I think I was good. I probably entered there,
Okay.
and I looked at the VWAP line underneath,
Yep.
and I entered my put underneath the VWAP because now the VWAP is what we say it has been claimed, right? And so it was claimed bullish because it's above the VWAP, and so we can now say the bias of the market is bullish. Even though price is down, we have a bullish bias.
Yeah, because it stayed above the VWAP all the way until like 9:45, 9:35. I mean, it was going up and down, but it was all above the VWAP.
Yeah.
And then it hit VWAP at 9:35 and then went further down.
And that was the entry. So yeah, that's our. So we're on the topic of entry. So
when did you sell that morning trade?
I sold that one at like 25%. I stuck to my principles at that point.
What time? Do you know?
It was before 11:30, before 11, maybe 10:30 ish. I believe prices started to, it was up and then it started going back to the VWAP, and I'm pretty sure.
Okay, maybe we should just look at this together.
I wouldn't be able to identify exactly what time. But, yeah, you could ask a question, though.
If I could
Can I
just
change you? Yeah.
sit here.
No, here, I'll trade you.
Right over here next to him.
Yeah, here, let me
Yeah.
get you out of your way so you can get by.
I just want to understand.
I usually write my magic number down.
Yeah. Okay, so
Target. Oh, here. Here, fine.
this is what I'm trying to understand. So this was the first peak, then it dropped. This was the second peak. You mentioned you started your trade about 8. I'm assuming right in this area. That was at 8:08 and 67.78. I mean, is that when you entered your trade?
Don't know.
Oh,
But
okay.
yeah,
Okay.
I can give you
Would you
feedback. Yes.
Does this look like the right time?
Yeah.
And then you see how it bounced around, and then it went below VWAP, and then you're saying you held on to this until about this time.
10:30-ish. And
That
based
was
on my
10.
puts, it was like on a down.
Yeah, exactly. Right
So
in this
that's
area.
what would give me the most premium and give me like 25% is to enter at the top and it goes down about 25% and then exit.
Can I ask you why you wouldn't have offloaded here?
Again, that may not have been my 25%. So you're okay. So look at it this way. So if you enter at the top, we'll just say top. We won't even use a number.
Yeah.
You want it to go 25% down, right? Go down 25%, and just because this is the low, that doesn't mean that is my percentage.
Okay.
Because if I'm up here, that's obviously not. If I'm here, that is below 25%. And it starts headed closer to my put side. And I start losing money when my put gets threatened.
Yeah.
So
right.
if I enter my call here, it goes down 25%. That's about right there, and not at the bottom like that.
Okay. Can you identify what looks like 25% based on the candles?
Oh, you can. So if you come in here and you see the ranges there, all you do is point to, okay, this looks like about 25% to me.
Okay.
You see what I'm saying?
All right. So you say you entered here.
There. So now,
And then you sold right around here.
Yeah.
So are you saying that this was about 25% then?
Yeah.
Okay.
yeah.
Okay.
So that's how the 25% works. Is it's not the lowest because hey, I mean, yeah, I would have probably been stuck in that trade a little while longer. Actually, it came back up, so I would have been okay up until like here, right? But that's the thing is I want to be out of the trade before those shenanigans like that starts happening.
Yeah.
And so I want to take my 25% as fast as possible. The only trade I want to be in until expiration is that 12-to-1 trade when the range compresses, and otherwise I've got a scalping mentality. So we call it scalping. You're in and out, right?
Got it.
Yeah.
Okay.
You don't want to be in the trade. The longer you're in the trade, the more likely you're gonna lose.
Yeah.
Yeah.
Hey, Walt, if it helps you, I looked right up here because I was following Titus.
Yeah.
And our times were a little bit different, but I entered mine at 7:45 a.m.
Okay.
Okay.
And then I sold at roughly 25% at 9:18 a.m.
Okay.
I sold half.
Oh, that's
and the
right.
other half I held.
Barry's like a baller. He's a high roller. He go like, I'm gonna let these 2 ride. I'm gonna let these 8 ride. We'll see if I can get more on this.
So you said you
That was a good move, Barry.
bought in at what time?
I entered the trade, so I sold the condo at 7:45 a.m.
7:45.
And then I bought back half of it at roughly 25% at 9:18. So what are we looking at there? Almost 30 minutes. A little more than 30 minutes. 33.
Titus, with all the different versions of trading with crypto and all
that was
the
a
other versions that you can do with
That was 25%.
What
and then
made you choose
I
this?
held the other half.
way, this direction.
And that I did
The highest premiums,
like
the highest return.
98%.
Okay. That worked for me. So,
Yes.
Because
I know there's so many different ways to trade.
So
It was.
So, like,
there's no
oh my God,
reason to
Dennis.
Yeah. This one's got the highest premium, and it's smooth. It's cash settled index, which I know right now doesn't mean much, but it pays out quick. It pays out fast. You don't need like this huge margin. You just need enough money to buy a contract.
And you said a contract's between 300 and 350.
Yes.
Is there a limit how many contracts you buy in a day?
No. Hey, but the more you buy though, because when you get to like 75, 100 contracts, they don't fill that fast. So they're left hanging there. And while they're hanging there, the prices
Right.
and you're trying to
So that day you made 20 or whatever. How many contracts were you?
75.
Woo!
Yeah.
That's a lot.
Yeah. Yeah. Man, that felt good, Barry. Oh my God. You know where I started, man. And when I got to 75, 100, man, I was like,
Yeah, I bet, man.
How many do you typically buy in a day?
Now?
Yeah.
About 20.
Okay.
Yeah, I got knocked down a couple pegs. Like, yeah. But yeah, so, and which is another reason why we should just close out with 25%. Because as your contracts grow, so does your profits. 25%, 100 this week is 1,000 in a couple weeks and 10,000 in a few weeks. Because this
You say
compounds
everything, yeah.
like crazy.
Right.
Like I've done it. I've seen the compounding power of this, man. I'm like, this is insane. This is my life. But anyway.
It's like the old story of would you rather have $1 million or a penny that doubles for 30 days?
Yes,
right?
and that is the video that was instrumental in getting me started. Like I showed Summer that video, and I was like, I'm doing this. Yeah, that video.
What was the video?
The penny compounded over 30 days or $1 million today.
Just the concept, not maybe an exact video per se, but the concept.
No, it is a video.
There's
On YouTube.
yeah.
They have the pennies and the
Oh yeah.
yeah. Like
I
it's
think it works out to be like 2 million or something like that, 3 million.
Seriously.
Oh, there's
penny
my pen.
compounded over 30 days.
Yeah.
Wow.
Yeah.
Wow.
Yeah,
It's
but,
insane.
So, but basically, when you're doing that, you're kind of going double or nothing.
Double.
Well, what I'm saying is, you're
I'm letting it ride. Yeah, I was leaving profits in and not taking very much out. I was living off of it though. I was paying bills and still compounding. And I'm doing that now. This supports my lifestyle. I mean, this is my job, my career. It's the cheapest business you can start in America. You can't start a business with $300, $400, $500 in the United States. You know what I'm saying? So I look at it as my business, and you know,
it's way more than that. The penny doubles for 30 days. How much do you think it's worth?
Well, you just said way more. So
How much? Do you,
gosh, who knows?
2.75 million.
$5.368 million.
Wow.
look at
That's
that.
crazy.
The power of compounding, man. And
But what's cool? Only at day 10, it's only at $5.
yeah,
Day 20, now you're at 5,000.
look at that.
Day 25, now you're at 167,000. And of course, by day 29, you're at 2.6 million.
What's it compounding at?
A penny doubles every day, so one penny turns into two, turns into
Okay,
four.
so they're
a
100%.
dollar turns into two, right? 100 turns
Yeah,
into
yeah,
$200, right?
Okay, well, sure, yeah.
Oh, I see. So this
That makes sense.
taking 25% of this doubles every 4 days,
Yeah.
and in a month's time.
If you lose once,
Well, 25% you're not gonna lose. Like if you stick to that,
Yeah.
you won't lose.
yeah,
I know at a point it gets scary, you know. But after if you consecutive, consistent, you see the wins, you stick to the 25%, and you see the money start compounding, then it makes you a little nervous. But it's still 25%. You know what I'm saying?
So remember I shared the story with
And
my
you
son with all his friends that are making some big money. They're all talking about just getting him to get a funded account.
Oh, futures.
Oh, those are
That's futures.
Okay.
Yeah.
Or is that a prop trading account?
Oh, that could be that too.
Because I've heard about people doing those too. I don't know.
Like my son goes to Grand Bay and he's got friends that have done like $1 million in a year and they went and bought like
Yeah.
a brand new $400,000 Porsche. I'm like,
True story.
What the
Kids.
I know, it's
I'm
crazy.
like,
My
kids.
nephew at Jesuit had the same thing.
Yep. They got time on their hands to master this.
Yeah.
yeah, that's what I'm telling
I mean, it can be mastered, but you know, like, oh, that's for the kids. It's like, well, maybe it is because they got the most time to like
That's what I'm
invest.
telling him. Like, yeah, you're playing video games, but dude, go learn this.
Right.
Yeah.
And it
You have
is like a
time, you don't
video
have-
game.
Too much responsibilities. You like all this stuff. You have sick setup at home. Like, do it.
Yeah.
Yeah, do it for real. Like, I mean,
You want to have a boss? You want to have a job? You want to know what it's like to be told where to be and
Yeah,
what time and
this
how
is-
much you're worth?
this is financial freedom, man. You can like make millions of dollars in 2 hours
Yeah.
doing this. I mean,
Yeah,
those short stories
anywhere
are
in the
true.
world.
From anywhere in the world. True stories.
Yeah.
True stories. And so, what I was saying, like, I want to get back to that 25% and the wins.
So that's our
The
rule.
only way, I'll put it this way, if you stick to 25% as your take profit, the only way you start losing or you lose is you trade against the trend. So I was guilty of trading against the bias a couple times where it was a bull bias and I went bear.
So you sold your.
So
What are you doing
if it's
call
bull,
credits,
it's going, if it's bull, it's going up.
Yeah.
I put the call too tight and gave myself too much room in the put.
Okay.
You know, expecting like a reversal. Oh, it's going to go back down. Oh, it's going up. It's got to go down at some point. That's the wrong mentality. That's what we call trading against the market. If the market's going up, you go up. And it's only invalid when the market reclaims the VWAP. So that's why we use the VWAP. So although it's going up, let's say it does come back down. If it hits the VWAP, stays above the VWAP, it's still a bullish market.
Okay.
As long as price is above the VWAP line, that's a bull market, right? When it's below the VWAP line, then it becomes a bear bias, and it's now a bear. Well, it's not. We'll just say a bear bias. That's more accurate rather than to say it's a bull market or a bear market. Mm-hmm. You know, the bias. Yeah.
So
that's how I lost a couple trades too. Is I ended up on the wrong, going with the wrong bias, because I tried to say, oh, it's going up, it's gonna reverse. Don't do that.
So what I hear you saying is, if it's trending in a direction, either up or down, just play the opposite side. Don't play.
Give yourself room on the side that is trending.
Okay, so you still play the put credit spread and the call credit spread, but you just move your call credit spread a lot higher.
If it's going up.
Yeah. If
Yes.
It's going up, yeah.
I move the put up tight, close to the money.
Okay.
I don't do in the money, but I'll do close to it.
Okay.
And with SPX, close to the money is 15 to 20 points.
Okay.
You give this baby some room. Yeah. Respect it. Yes, you respect the range.
Okay.
And you look at the supply and demand zones, and always go below or above the supply or demand zone. So if it's a put, I'll get close to the price, but I'm going below the nearest demand zone. Right? Because price will go away, but if it does come back, it's going to that demand zone.
I've heard you talk about the supply and demand zones.
That was next on our list.
Support and resistance, or
support and
Or is it
resistance is a retail mentality.
So,
okay.
just for fun numbers, I took the 350 contract price. If you make 25% each time, and it compounds over 30 days, that's 282 grand.
True story. I made 132,000 in January.
That's wild.
Yeah, that was wild. I never made so much money in 1 month in all my life. Right?
Titus, most people haven't.
Oh,
Yeah.
well, hey, I listen to the guys that do.
Oh, yeah.
Yeah, you know what I mean? And
Yeah.
there's a lot of them.
Oh.
And he's telling us about kids that do.
Oh, yeah. But still, that's a small
That's why I look at
percentage of the
myself like,
population.
and they said they would teach you, like,
Hey, well, it's nothing. Like, I mean, when you begin to realize, like, how endless, just the infinite amount of money, like, that's nothing. You know, I mean, I know that's a terrible mentality to have, but
to the average employee,
Yeah.
right, that lives here in California,
It's mind-boggling.
that just seems not possible.
Sure.
Right? And that's the shift
Yeah.
that has to take place in your mind. That's
yeah,
not only
that
is
is
it
possible.
probable. That's possible.
That's possible.
That's probable.
I'm here to testify. It is possible. That is true. It can be done.
Yeah.
25%. And I'm just thinking of all the ways that could be invalid. Actually, I mean, the objectiveness is appreciated, and I'm trying to, like, how would that be invalid from my experience? What made me lose? How come, it's 9 out of 10? Why isn't it 10 out of 10? Mm-hmm. Why isn't it 10 out of 10 trades? Lose 9 out of 10 based on execution errors. I made execution error this month, last week on the new platform.
But you learn every time you do that, though.
You do. You do.
That's the thing.
You do. Make sure you do. And write it down even, quick note. It doesn't have to be like all your feelings and emotions, but quick note. I lost this trade, execution error. Two contracts stayed open. A true story. I lost $1,000 this week. Ended positive, but I lost $1,000 on one trade because I had 10 contracts. I meant to close out all 10. I only closed out 8. I made an error, and
You try and keep up with Barry. Is that what you did?
yeah. I tried to let. I did. Well, I did when I realized they were still open, because at a point I'm looking at my stuff and I'm like, that doesn't look right. And then I like, why doesn't that look right? And I found 2 contracts that were open. They were green, and I'm like, oh well, yeah, 2. I cashed out on 8, and I let them ride without realizing that, when I looked at them, they were like high percentage, $300. I'm like, $300, yeah. But then the trade turned against me, and I lost $1,000. I was like, wait, it was 300. I mean, what was the ratio on that? You know what I mean? Why did that be 1,000? And it was. So, I mean, that's how I lost, like on a winning trade. Like, I said at the beginning, most of my losses have been on winning trades. And so it's execution. This one, I meant to close it out, but I left it open when I saw it. I should have closed it. Poor me. I should have just, once I realized that my execution was poor on the close. That was my only loss this week, I think. And it should have been like a win, but I managed to turn it into a loss. And I think that's how why it's not 10 out of 10. Because ordinarily, I can execute pretty good, and I'll say it without bragging, but the strategy is phenomenal. Like there is no holes in the strategy for the most part, other than, well, there's room for expansion, like consultingbarchart.com. Like that's normally a habit, but I didn't do it that morning, and it just so happened to be a morning when the stock shot through the lower support levels, and it dropped to a level that I had not identified. And that could have been a loss. Like we could have bailed out of that trade, cut losses, and so forth. But we didn't, and we won. However, that was a tactical error, an error, a shortcoming in strategic planning. I could have used barchart.com, identified a lower support level, and that could have changed the way we positioned our puts that morning. Just with that knowledge, like, hey, there's a level way down there, or it could have just adjusted our mindset. So I'm just thinking of ways that I've lost or things that have concerned me about my trades, even if I had won, just trying to keep that win percentage, high. But, the 9 out of 10 and the compounding, that's real. Why did I run with that? You asked a specific question and I have more to say. Oh, we were just somewhere.
I know we were talking earlier about rules for entering the trade.
Okay, back to that.
You basically said enter on the second retest.
Yes.
At the top of the box.
At the top of the box. And then even at the VWAP line, we can enter trades at the VWAP line. However, what we're looking for is acceptance, rejection at the VWAP. So what happens above the VWAP? Well, we've talked about price being at the top of the box, but let's talk about price being on top of the VWAP, touching it, very close to it, consolidating across the VWAP. What we're looking for is a 5-minute confirmation candle above the VWAP, and then price goes away from the VWAP, returns to the VWAP, and then another 5-minute candle retest. So we're looking for a 5-minute close above the VWAP, and then we can enter.
You want 2 5 minutes is what it sounded like. Is that
Yeah.
right? You want 2 5-minute candles closing above the VWAP.
Yes.
Okay.
And that's confirmation that we have a bullish bias, and price is going to ascend. Price is going up. Yeah, I know. You look like you gotta go.
It's my son's birthday. Sorry.
Okay, well, okay.
No, I just
This
wanted
is
to
the
say
last topic.
No, you're good.
And you are good. This is it. We're the entry. We'll stop right at this one. And happy birthday!
17.
Wow, Denver
that was
is 17,
I know,
man.
dude. Now he hit the years like that went by too fast. I said, guess what? It gets faster.
Wow, dude. I met him when he was 7. Was that 10 years ago?
7 or 8. Oh, that's right. You knew Ashton and Denver.
Yeah,
before me. So,
yeah,
7.
yeah. Wow, that was 10 years ago, man. That's crazy. That's crazy. Lifetime.
I know. I know.
Dang. Right on. Okay. All right. Enough nostalgia. Yeah, the 5-minute displacement candle. Underneath the VWAP, what we're looking for is a simple bearish red candle. That's all it takes for the bearish bias underneath the VWAP. Doesn't take much. We don't need a retest on that one.
So it's one 5-minute candle,
Underneath.
one negative 5-minute candle.
Yes.
Is that what I'm hearing?
That's the only signal we need for negativity.
Okay. All right. Negative carries a lot more weight. Huh?
Yes. Indeed.
What you're doing there is selling puts.
If price is going down below the VWAP, I'll just write a V. If it's going down like that, right? The VWAP is here. Hey, let's get rid of that top one. And price is breaking down. We put the call close and then the put far. And that's going with the bias, the bear bias. And that's what I was saying is a couple times I put the put right underneath or close, too close. One support level is not enough. I'll put it that way. You asked about the support levels, and I said that's a retail mentality. What we think of now is supply and demand levels. So the supply and demand level is where the support and resistance starts, but it's an extended zone.
Oh, okay.
Yeah, so the zone extends 10 to 15 points.
Okay.
And we can often identify it now by looking at the open interest. If you see a high number at the open interest, you got to go to the option chain to see that. There's an option chain. You'll see it in the Thinkorswim options. Okay, you go to the options chain. You'll see open interest. That is, like I was saying at the beginning, a target. So in terms of your placement, if you are like placing your put, for example, you want to put it below the open entrance on the downside.
Okay. Yeah.
Because price is targeting that open interest on the downside, and you want to be below the target.
Okay, so you put the call credit spread when it's trending down. We have that single 5-minute candle closing below the VWAP. Put the call.
You can
put
go
the call
tight.
credit spread near
the
top
VWAP.
of the VWAP.
Yes,
then-
give it room though, because it's gonna make a play back to the VWAP, right?
Okay.
Yeah, and
So-
but stick to that 25%. You're good when it makes the play back to the VWAP. If you're already out of the trade by the time it's coming back, because it's coming back, it's gonna try to come back anyway. It may meet resistance along the way, which prevents it, but it will attempt.
Okay.
To
so you give yourself some room.
Give yourself room.
And you're saying then put the put credit spread 10 to 15 points below where you see the most open interest, below the support. Is that correct?
Yes.
So if support's here, VWAP's here, it's trending down, you're saying go
15
But-
to 15 points.
below the. But if support is here, Titus,
Oh, I.
if support is here, but the most open interest is down here, you're saying go 10, 15 below the
Yeah.
open interest.
Yeah.
Okay.
And that's trading, institutional trading.
Points are considered price.
Yes.
So if let's say if we're at 100, you're going down 15 points from there. You're at 85. That's what you're saying by points.
Yes.
Got it.
That's really good, Titus.
That'll keep us. Like, I hate stressful trades, man. Like, you're like, because hope is not a strategy.
Right.
Hope is
Now
not
we're
a
gambling.
strategy.
No, we're gambling now.
No. Probabilities. Stick to those probabilities. And so that's why 15 points below the target. You're giving up premium, is what you're doing. So you're
To be safe.
to be safe.
Yeah.
Right. We're not chasing premium. We're not chasing price. We want high probability trades.
How do you figure out percentages if your goal is to be within 25% each profit?
Good question. There's a couple ways of doing that. You collect a premium. You can divide that and come up with like 25% and enter it in your limit stop order. So there's a way to automate that 25%, or you can do the math.
Are you figuring out, let's say, like you're buying multiple contracts. Let's say you bought 10 contracts or 20 contracts. Some you're winning more than others and things like that. You're figuring out your whole portfolio for the day. of your
I'm only
25%.
doing one trade at a time.
Okay.
So I will put 10 contracts in this one trade.
With all at 15 points, blah, 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 blah.
Yeah. So, yeah.
So you're making the exact same play 10 different times.
Yes. Yeah. With 10 contracts, that's exactly what's happening.
Got it.
It's the same play times 10.
Got it.
Right. We can look at it like that. What blew my mind was when I did the math on 100 contracts. So one, not 100 contracts. What am I trying to
You're
say?
75 you did? You're 70?
Wait, one contract is
350.
100 shares.
Yes, 100 shares, yeah.
One contract is 100 shares. That's what I'm trying to
so that
express to you.
350 price is the minimum of 100 shares you have to is one contract. That's
Yes.
really more accurate.
Yes.
Got it.
And then you do the math on 10, and you're like, wow, that's a lot of contracts. That's a lot of shares.
Shares, yeah.
I'm moving, 10,000, 20,000 shares, man. So that was like, wow, that's pretty interesting. Because we're doing the options at a discounted price. So
Right.
yeah, we do this at a discount. Entries. That's pretty good for entries, huh?
Yeah, I think so.
What else will we need to know about an entry at this point? I know you need to know how to open and close one and make an actual
We'll get
entry.
more. I'm this. It's
Yeah,
fine.
but once you start with that Thinkorswim, then the entries and the calls and puts will
I'll pull
make
my
more
desktop
sense.
and play around with it.
Yeah, and
Just
then you
get
look at the
comfortable and
chart.
look at the I'll pull up some YouTube videos like show me basic settings, show me this, show me.
Yes,
Just start getting a lay of the land.
yes,
Yeah.
yeah.
I
Yeah.
sent my
Cool.
family.
Thank you guys. It's good to meet you, gentlemen. I'll see you shortly.
All
Yeah.
right.
I'll be
Yeah.
on the next live.
All right.
Thank
Enjoy,
you, my
brother.
friends. We'll see you
Yes.
soon.
What did you send?
I sent my family, I pulled out, I forget what they were, but I pulled out a video on iron condors,
Iron Condors
order entry
order entry
on Thinkorswim.
on Thinkorswim.
I might have pulled out 2 more videos, but just like that would give them some basic things so that they have a basic
Working
understanding.
knowledge of
Exactly. Yeah. I don't know I don't remember what those were, but if that's something you're interested in, I could
Yes.
send it to you. And if
Yes.
you,
I mean,
if you think it would help people.
yeah, I don't want to help him. I love that guy. And there's quite a few others that just need to get started. A basic foundation. That would have been good, huh? Paper trades, and when we first talked, just imagine doing the paper trades, you'd be so far. Yeah. I just didn't. Just learning things as we go, and the paper trade on Thinkorswim is good for the single leg strategies. and that was another thing that I wanted to talk about with the new people, or the people like you that haven't like done very much trading, is the call credit spread and the put credit spread is an easier strategy to apply than the iron condor, because it's a two-legged strategy. So you still have the insurance, the protection, but you also have the short put, which is your money maker. So you sell a put, you buy a put, and that's it. And what you're doing is you're just saying price is going to go up. It doesn't have to stay in a range. It's just price is going up, period. Goes up 25%, close it. Much easier play.
Yeah.
Yeah.
And the calls are in the reverse.
Price going down. Yeah.
Right.
And so you can use the market structure. You can use the previous day's highs, lows that we covered. You can use the VWAP and the same order entry, the same trade entry. You can use the entire strategy that we're talking about and apply it to, like Barry even did it on Friday. He came in, it's like, oh, that was smart, man. With the, what was it, a call credit spread? A CCS or a PCS? What did you do?
Are you talking about at the very end?
Yeah.
Oh, I did a condor.
You did do a
super
condor.
Wide.
Okay, super wide. Yeah.
I think there's like 2 deltas of like 5 or 2, something like that.
Oh, smart. Yeah, safe.
Like I just bought 20 contracts.
Safe. Yeah.
Exactly.
Yeah, easy money.
Stay in the safety zone.
Yeah, easy money, right? That was
Yeah.
easy.
It was, yeah.
It's stress-free, easy money. A 2 delta means that, it's got no chance, basically, of threatening your position.
Yeah.
You're 80%. I mean, like that, a 2, that's like 98%,
Were you able to make 25%?
I made 100%.
Yeah, that goes to expiration.
Wow.
So that's the one you open and just walk away from. And that, you don't have time, got to get back to work. You could go with 2 delta. You could, and it's just not even going to get close to that.
Wow.
Yeah. So,
Well, but the kind of drawback of that is 20 contracts earned us $200. So the premiums are small.
they're small premiums.
It's almost like going to the ATM machine and withdrawing money, because the odds of you not being able to withdraw the money from the market are almost 0. So it's
Yeah.
free money.
It's just
$200.
Yeah.
$200, right?
Exactly.
You want more? Buy more contracts.
Yeah.
Like you can put, $20,000, $30,000, $40,000 in there and do 2% deltas. 2 delta. And, that's going to pull you more profits, but it's completely and totally safe. Yeah. Just like that. Walk away, don't have to monitor it. And like you said, it's just easy money. Yeah. And that last trade of the day, that's kind of what I do is I pick the safest distance that I saw from the previous day's action, and I give it room, like you were saying, it was in the 60s, and then it came down to the 20s, and it finished in the 40s. Well, I was prepared. I placed my trade outside of the 60s. I positioned at 25 because that was the low that they had already swept, and so I knew the probability that price was going to go lower than that was unlikely. And based on my calculations, based on the VWAP, based on the range that SPX had shown me that day, I felt confident that it was going to finish, in about the 50s ish, and so I did a tighter condor because however, that was one you could walk away from and still feel like, okay, I'm gonna make money. Yeah. Yeah, so that's still pretty good. So there's ways, there's strategies. The 12-to-1 is the most likely, for Adam. I'm not sure about your work schedule, but there's a few other people that can do the 12-to-1 trade, and
the thing,
and
the
profit.
thing that concerns me is that you need to have been following the trending throughout the night in order to be ready.
So this right here shows you the range, right? I got the 2 lines right there. It shows you the range of the day. And so when it comes to the 12 to 1 trade, that's all you need to know is what was the range today. And so you could draw your box and you can see what the range is, and you can then place your condor above the high range and below the low range, and you still have a decent play.
Yeah, I guess so.
Yeah.
You still go 10 to 15 points above the high and the low?
Yeah.
Or would you go farther?
No, it's tight. Like
Okay.
that range it's the range.
Okay.
It's the true range. Like we were saying, it takes a catalyst for it to break the range.
Okay.
And that's true range.
Okay.
Yeah. We can accept that as true. And the probability is very high that it's going to stay in the range. And then depending on you could probably bring it. No, well, I knew that there was a zone at the bottom that could be targeted. I did as tight as I could do.
So you might check that lower liquidity zone first, maybe the on-bar chart, and see.
Well, I just knew from the entire day that the 67.25 zone was gonna be the lowest zone. Like they already swept it, could return there, do another sweep, which they did. It went as low as 67.27, but then reversed back to 67.40.
Okay.
So they did the sweep and then headed back towards the VWAP line.
Okay.
So that was that deal. Again, you don't have to chart it all day. You just have to be able to identify the range, which is pretty easy. I just drew 2 lines, and that showed me the range, and I was able to formulate my thesis based on just the range.
Yeah.
You still want to do a smart money roadmap and identify, the zones, the targets that are in the range. So because there will be some targets in the range, and the only target at the bottom was the 6725 in the range.
Oh, okay.
Because there could be 2 targets in there.
Okay.
Depending on how low it went.
Yeah.
Yeah, it could be two support levels in this particular case, but there was only one.
Oh, okay.
The upper range had like a couple resistance levels, and so I just went above the highest resistance level.
Okay. I noticed my smart running roadmap numbers were a little bit different than yours.
How much different?
10 to 15 points. Yeah. So I think it's kind of,
Did you use what chart? What chart did you use?
I gave it a picture of the ES and a picture of the SPX.
From which platform? This one or?
From TradingView.
Okay, that's the difference.
Is it?
Yeah,
Oh,
they're not synchronized.
what does that mean?
That means that this time frame will not match that one.
So
They're all different.
even if we have so if we're both, let me make sure I'm understanding what you're saying. If we're both looking at the SPX 5 minute, you on your platform and
Trading
TradingView,
Trade Station.
yeah. So if TradeStation and TradingView, we're both looking at the SPX 5 minute, they're gonna be different.
They're going to be different.
Really? Why is that? Or what do I do?
They're not like synchronized.
But shouldn't they be? Because they're looking.
Should
at the
they
same,
be?
It's the same asset. They're both looking at the SPX.
Yeah, but how would I describe why they're different? They're reporting different. Why are they reporting different? That's where we ask the engineer. Like why? Like why are they reporting different? How come they are both tracking the SPX? However, and we're both on a 5-minute time frame, but his platform and my platform don't convey the same data.
Most likely it has to do with latency, just delay, just internal delay.
On the platform
is working at 10
More
o'clock
efficiency.
in 0 seconds. The next one is 10 o'clock in 30 seconds, maybe.
So that's interesting because that's I noticed that the other day. I noticed like his SPX price and my SPX price were different.
Yeah.
And mine seemed to be lagging his a little bit.
Yeah.
And then at certain points it would kind of sync up. But I'm like, what in the world am I seeing?
Yeah.
What is this?
Yeah, it freaked me out like a while back too, because I had Robinhood, I had TradeStation, and I had all these different platform charts up all at the same time, and they were all different. I was so confused. Man, I could not make a decision. Like, I don't know what to do.
It's about latency, all the servers and all the checkpoints. Each platform servicer is going to
Yeah.
their various checks and balances in there.
Yeah.
I would expect that.
Okay.
Yeah, I threw it in Chat GPT, and Chat explained it to me. Like, they're off. Like, they don't match up. They're different.
The other thing I noticed is like your ES, which is the S&P 500 mini futures, right? That's what it is. Mm-hmm. I noticed mine on TradingView, mine is always lagging the actual time. So if it's 11 a.m. on the SPX chart, it's showing 11 a.m. timing. But my ES chart will stop at like whatever, 10:50. It's like lagging behind.
That's a
Always.
lot-
Yours is
that's a
always
lot of
ahead,
lag.
I think, if I'm seeing it correctly. I don't know.
Well, yeah, that's one of the things that they reviewed about TradeStation is the charting, and the efficiency of the platform.
Oh, maybe we should look at that too. But we'll stick with this for now. I mean, just getting
Yeah,
going here.
yeah, we're kind of just getting started, right?
Yeah.
Hey, we covered a lot of
Good,
stuff
Titus,
today.
thank you.
Right on.
Super interesting and helpful.
Yeah, that was good.
Marlene is
Yes, how is she doing? I'm signing off here.
very sick.